Alrighty. There we go. We're back, baby. All right. Let's give it a few minutes for everybody to get here. As always, I'll be right back. I'll be back in a few minutes. Give me a second. We'll start in about. Give me 1 sec. Just want to test something. I'll be right back. Give me 2 seconds. All right. All right, everyone. Thank you for joining. Give it a couple more minutes for everybody to get in here. All right. Let's see what's happening. All right. People are joining. Give it a sec. Give it a sec. Almost there. Almost there. Last time we did this was I think March, February, and we did a lot of gold trading. I think we didn't have a single loser when we were trading live for a month, and I give a lot of valuable information there. Hopefully, people used it. But we're gonna do a lot of today, a lot of basic foundational work to lay ground for future broadcasts. All right, so let me just finish this 1 second, and we can start in 1 minute. All right. Funding. All right, let's start. So whoever wants to join, they'll join. All right. It's been, like I said, 3-4 months since I showed you how to trade gold. I think essentially we were caught. What was it? This is daily, 4 hour. When it was trending hard, all of February, we caught them pretty much all of this move, right? So for a month and a half or whatever I was doing those lives till the end of March. So I think we've stopped somewhere here. Then I went, I had a business trip. This happened without me doing the lives. Hopefully you guys survived. Then another leg up. And the big question is, what the hell is happening right now, right? So we can take a look at both futures and CFDs. This will be for 1 second, for both funding traders and funding futures. So whoever the analysis doesn't change. If you trade the vehicle you trade is just the vehicle you trade. So either you're trading GC, which is a gold futures, or you're trading XAU spot gold. It's the same thing. Okay, very close thing. So the analysis you do, it's very applicable to both. So I will start with gold. We'll move down to I don't know, indices. Then we can do some currency pairs, and obviously I'll take some Q&A. And this should be we're gonna start doing this every day for the next 3 weeks. I'm gonna do another limited run, so pay attention, because like I said last time, people who paid attention made a shit ton of money. So it's up to you. All right, let's rock and roll. All right, so I'll do the futures because it's cleaner. So how do you start technical analysis or any analysis? Obviously, you want to see the big picture. You want to start, you pull out, you zoom out, you want to see what the fuck is going on, period, right? So you start with a weekly chart. And it doesn't take a genius to figure out what the fuck is happening with gold, okay? By the way, the cursing and all those retards who complain about cursing, this is how people talk on Wall Street. This is how people talk in the banks. If you're too thin-skinned for New York type of talk, get the fuck out, all right? So plain and simple. So we are here to make money and not be touchy-feely and whatever the fuck current generation is safe space bullshit nonsense that propagates through like cancer through our society right now. Anywho, let's take a look at gold. So gold is obviously in an uptrend. It's been in an uptrend. It's probably the best trading vehicle in the last few years. I've been primarily trading a lot of gold, also equities and indices. Started doing a lot of less FX because it's a lot choppier. I basically in 2000 when COVID hit, the USD was my primary vehicle because it was the disparity of interest rates between Eurozone countries and the rest of the world and the United States was such a disparity that it was a one-way traffic on US dollar. And that was basically all of this when I caught pretty much all of this fucking move right here. And this is a weekly chart. So for weeks, it was just tanking. Then once the rates, when the obvious play was over, the obvious play was over. So a lot of traders who are smart, we switched to another vehicle which is trending again now, and it's a one-way traffic. What do I mean by one-way traffic? One-way traffic is when you have fundamentals aligning with technicals. Some people just trade fundamentals, some technicals, some kind of combination. I prefer a combination because there has to be a macro reason that drives the big picture. Okay, for me. This is how I trade. You can trade 1 minute scalping, technical only, mazel tov, good for you. I'm sharing how I trade. So I need to understand the big picture first, right? When there was a rate differential, meaning the yield on US was 5% and it was 0 still in Europe, why would you, let's say you have $100, so you're going to put it in the US bank or you're going to put it in the European bank, right? This is how money, big money, looks at in very simplified terms, so you can understand. This is how big money looks at the what to do with the investments, right? So the biggest, whoever offers the safest and yet largest yield, meaning the amount that they're going to pay you for your money, that's where the money is going to go. It's very simple, right? So if I'm offering you 10% and the schmo down the street offering you 1%, then why would you give it, and the risk is the same, then obviously you're going to go with the guy who gives you 10%, right? Same thing with the big banks. Same thing with world currencies and everything else. This is one of the primary reasons that moves the markets, and rate differentials, difference between the rates of competing currencies and countries. Their bond yields, okay? That's why it's important to look at bonds. But again, this is why you have to look at the big macro picture to establish what the hell is going on in the world. The reason why trading is so addictive, it's not only the gambling aspect, and everybody starts as a gambler, and then you have to kill the gambler within you and become disciplined and to actually start making money, right? So it's not about the excitement, but it's the most interesting piece of puzzle to put together, because you have to understand what the hell is going on all over the world. I know what's going on in China. I know what's going on in Australia. I know what's going on in Europe. I know what's going on in the United States, in Asia. It doesn't matter. And I know their rates. I know, if China is having a problem, then it's going to have an effect on Australia that is supplying them all the raw materials, et cetera, et cetera, et cetera, right? All the chain event. And then once you establish these macro themes, that's when you start using more technical stuff, whether you're using classical technical analysis or ICT or anything else. It doesn't matter. It's the same thing. It's just different words describing same phenomenon of repetitive cyclical behavior and what pattern recognition, okay? It just describes the patterns that a market is printing on the screen. And the printing on the screen, all these charts, these are just reflection of psychology of traders. That's why it's important to understand who you're trading, what's the big macro picture, because then you can get into the heads of other traders, because this is a zero-sport game, zero-sum game. It's if I make money, that means you sold to me, while two parties were thinking at this price. One was seller, one was buyer, and both of them thought that they're gonna win. Okay, and the obviously one of them is going to be in for a disappointment, right? So that's why it's a zero-sum game, and it is what it is. But it's a very fair sport. Nobody cares about your skin color, your sex, where you are from, what you do on your weekends, anything. Doesn't matter. If you're making money, you're making money. That's all that matters. Okay, that's it. And you're making money by trading against other people. That's why it's important to understand what other people are thinking, so you don't end up like a fucking cattle sheep in a slaughterhouse. Okay, all right. There's time to follow trends. There's time to not follow certain trends. Okay, and that's how it usually happens. The retail market is usually the last to enter some kind of flow, and then they get taken to the cleaners. And that's why 95% of traders lose money, because the other 5% takes their money and puts it in their pocket. That's trading. All right. In any case, once you understand the big macro picture, obviously there's a lot of still uncertainty in the world with the dollar, with the Trump pressuring Powell to lower interest rates constantly. This and all the global geopolitical risks with wars, with all the nonsense that's going on. Give me 1 second, guys. 1 second. 1 sec. 1 sec. 1 sec. All right, back. All right, so with Trump and Powell basically being at the opposite ends of what they want to do, I think Trump will still prevail and it's already being priced in that the Fed will be cutting rates eventually anyway. So either way, gold should be going up. Why? So this is why it's good to be long gold, and this is why big traders are long gold. Both macro scenarios are winning for gold. That's why it has been one of the better trading vehicles recently. So scenario number one, Trump wins and Powell lowers interest rates. If he lowers interest rates, then the yield on US dollar that the gold is trading against will offer less yield. Thus, gold will rise. Okay. If Powell wins, and we have not if we have to keep the rates up because of the inflation, gold still becomes a hedge against inflation. So either way, this scenario, macro scenario, is already supporting that gold should still be going up. Again, whether or not this is going to be a fact, nobody knows. But you establish a macro theme, and then you see if the price action is supporting this macro theme, and it is supporting this macro theme, right? And people were trying to short gold here. They're still trying to short this fucking thing, and they're getting cleaned out to the cleaners. Okay, so every time the gold starts pooping a little bit, everybody jumps on okay, this is the top, and that's the problem with a lot of retail traders. They are they want to catch the top and catch the bottom and have the sniper entries. Forget about that bullshit. It's bullshit. You're gonna get run over more times than you're gonna have that one good win when you caught the turnaround, right? You're gonna feel good. It's gonna be impressed into your memory that this is a good feeling, and then you're gonna have 7 shitty fucking trades doing exactly the same thing, and you're gonna be losing money overall trying to pick tops and bottoms. Find a vehicle that moves that's like gold right now in the last couple of years, right? Since 2022, when the dollar ended its fabulous rise from the grave, then reverse started, and the gold that has been consolidating for years started moving as well. Okay, so now that we established that this is a trending market, we don't know when the music is going to stop, but we will have clues when it stops. Right now, it's been consolidating since April. As you can see, this is the top, this is the bottom. Let's take a look at the daily. So these are the major inflection points, and obviously you can also mark now these levels as well. They're very important. You always want to understand that big money, they don't trade on a 1 to 1,000 leverage. Okay, nobody is trading $3 billion on that leverage. They're trading with 0 leverage or 1 to 2, 1 to 3 max. Okay, and that means because they have so much money to deploy, they don't really need to go to a 5-minute chart to deploy $2 billion. Okay, they look at daily. So that's why daily levels are super important. Weekly, daily levels is where institutional money kind of plays, okay? Because their goal is to manage money 5 years out, 3 years out, at least minimum 1 year out, okay? Money is locked in. You can't take that money out. So they don't care if one day it goes up, one day it goes down. They look at the major flow where all the money is keep flowing in, and the big levels. The big levels is when they add to positions, reduce position sizes, but they'll mostly work from weekly and daily charts. So you fucking around on the 5-minute chart is fantastic and all, but that's just you making a living, not big institutional players moving billions and billions of dollars, right? So that's why we mark big daily levels. Now, what is this telling me? So obviously we're in a larger consolidation. It's choppy. It's getting choppy. It's not as easy because it was obviously making higher highs, higher lows. Then it made a low, and it tried to make a higher high, and it couldn't hack it. It made a new now lower low, and it rose and made a new high. So this trend is still bullish, and as you can see, it's supported by this moving average, which gives you basically an average price that mean reversion to the average price, which is a good value area essentially. Okay, so what's happening now? Yesterday we bought. I got stopped over the weekend. I bought it somewhere here. I got popped on the weekend open, but then I rebought against here and rode. I closed yesterday at 4 p.m. So I rode all of this up, and as you can see, we took out this high now, and look what's happening now. So why you shouldn't be buying this breakout. Retards bought this breakout, okay? And you're not a retard. I'm going to show you how to trade this right now. So the professional trader sees that we made a higher high. What we are now expecting is this, and then up, meaning make it yellow, some shit. All right. So what's happening right now? Does it mean you should short it? No, you shouldn't short it. You could scalp short it, fine, but that's against the trend. And if you're a novice, if you're trading less than a year, you have no business trading against the trend. Okay. So what happened here? Well, let me make it yellow. Jesus Christ. Boom, yellow. Okay. So this was the previous high, as you can see, marked here, the big level. What happened? People who were short here, their stop losses are where? Previous swing high. Everybody understands this, right? So their stop losses were here. This is what happened. We grabbed the liquidity. They popped the stops. Not your fucking $3 stops, okay? Nobody's hunting your $100. Big professionals playing against other big professionals. Nobody cares that you have $1,000 and, oh my God, they ran my stop and right? Nobody cares about you. You're not even on the map. Neither am I. Unless you're managing, billions and billions of dollars, it's irrelevant. Your stops are irrelevant. Retail market volume is irrelevant, pretty much. All right. So Forex trades what, $7 trillion a day? So think about that number. Bonds also in trillions. So, I mean, your $1,000 is hardly makes waves in that environment, okay? Or even $1 million, or even 10, okay? So, so what's happening now? Big traders. These were the major waves down, right? This was the correction of this move up. We've corrected it. And now we've made a new high, which is indicative that we're trying to bounce. Obviously, yesterday this nice bullish candle was there. Friday was also nice, but they ran the stops, and then they on Sunday open it flushed. This was the Sunday open. It flushed out, ran the stops, and then it took off. So I just rejoined and made money. So who gives a fuck? And that's the mentality. It's okay to take stop losses. And rejoin. You'll still make money. You just have to have the fucking balls and confidence, not to be a little weenie and fucking piss in your pants and be mad just because there is a stop loss. Just take the fucking stop loss, move the fuck on, and that's that. That's trading. You can't be mad at the market because then your ego gets tripped up and you start revenge trading. You get into these emotional states that will just cause more losses. So avoid that mistake. Take a stop loss, move on. There are plenty of opportunities coming up every day or every other day, whatever. But there's plenty of them for you to take advantage of and just make that money back or make more money, et cetera, right? So it's easier to move. Don't have some garbage occupy your headspace because because you had to take a stop loss or you're not taking a stop loss, because now you're thinking about the loss and you're thinking about even the loss increasing because it's going against you. Okay, so it's easier to cut it off and move on. You have clear headspace, and that allows your brain to find a new opportunity, okay? Because when you're concentrating on shit, you get shit, meaning the loss and the market is unfair and the broker ran my stop loss and that all this fucking nonsense. This will only put you in a mentality of in a losing position. So you're not doing yourself any fucking service whatsoever, okay? So with gold now trapping. They ran the stops, and people who were pushing this market up took profit now. They pushed it up, they ran the stops, they grabbed the liquidity, and now we're having a turnaround candle forming on a 4-hour basis. Okay, so does it mean you should be selling? You could scalp against the highs, sure, and maybe ride it a little bit. But if you want to be long-term profitable, don't just trade with the trend. Okay, the trend is up, the new trend is up. It's a wave 1, 2, 3, 4. There's going to be a pullback. What you want to do is not think that this is the top, because it can go higher today. You know, it can easy. It's the day just starting in the United States. All right, so you can easily do this. So don't scalp and circle jerk. Just wait for this movement to be over. You're gonna get big candles going down. All right, which will signify that there is a correction going on. What do you do then? You put some fucking Fibonacci on. You look at the levels where it's gonna start retracing from, and you buy there for a move up. And that's it. That's the whole of trading. You know, you don't need to be a goddamn fucking genius to figure this out. You know, so you put some fibs on. Again, I'm sharing my techniques. Not you can. There's the stupid phrase "1,000 ways to skin a cat." I don't know who's been skinning cats and how this amazing phrase originated. What kind of fucking psychopaths were skinning cats? But I guess, but yeah. Anyway, but there are ways to basic minimum retracements into some areas. So first of all, why unprofessional but stupid traders got caught? Because they are breakout traders who have no patience. So there's two class of losers sitting in this position right now, and this is what I'm talking about: understanding mentality of traders, and you need to be on the other side, on the winning side, to understand. So there's first losers are who were caught shorting somewhere in this area and didn't close their positions because their stop losses were either here or a major level, this major level right here, right? So that means they just got their stop loss got popped, and this is what this candle is, right? This is their stop loss city. Okay. Now there is another retarded group of people that are even more retarded that just got caught. It's people who bought this breakout after a straight up vertical rise. When you see price action in this type of unsustainable move, instead of doing this, right, climbing slowly, accumulation, you get just a straight line up. Don't buy the breakout. This move is running out of steam. Okay, so you buying right here at the top, you literally are, it's because you're chasing. This move is already over, almost over. Wait for the pullback to an appropriate level, and then buy it. And which level do you think is going to stop at? I don't know. I don't give a shit. You know why? Because I'm going to watch what happens when I see a big fucking candlestick, a hammered candle form at one of these levels, and I see a follow through, a turnaround essentially, right? I buy it right here. I don't leave an order here because I don't know if this is going to go here, it's going to go here, 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 here. All I am is waiting at this point to spot a good level, a bounce from a good level. I see that this is an inefficient price action that is unsustainable because nothing just can move in a straight line up. It violently goes down. It violently corrects as well. This is not super violent, but it's still good enough for a correction now. Okay, if you look at the average duration of waves, this is pretty much about the distance that they move. At least you're gonna have a little correction that you can enter. I don't know how far. So how far it's gonna, so here, this is wave one, right? This is another wave here. I don't know how deep the correction is, but there's always going to be a candlestick that gives you ability to enter. Not always, but often enough, okay? So, or maybe it's not going to give me a very clear sign. So that's okay. Then I wait for the next opportunity. I trade some other instrument. So, but for now, meanwhile, I can see that the daily range of gold has been pretty much done for already. Can it go more? Sure. But usually, again, the mission was what? The mission was, since the trend was down, to step out the people who joined late to the party and didn't take profits here, okay? And this is, by the way, called an exhaustion move, just wham, and the reversal, because this is when you ran out of sellers, and then just short covering started. So people and buyers started piling in. So people are covering their shorts, meaning they have to rebuy from the market, and then their new traders coming in, watching. Okay, so this is a very nice exhaustion candle. This is leg 1, 2. The leg 1 goes retest this high, right? So this is boom, boom, and continuation of the move, right? So this is what I want to see again. I want to see boom, 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 and then continuation where I buy right here. And it'll give me a sign for that continuation. Okay? And it takes patience. Again, I'm showing you how I trade on 1 hour charts, 4 hour charts, very high probability trades. I take 1 or 2 trades a day, and that's it. I walk away and I sleep. And when I was trading, when I was in my younger years, I was trading in a fund. When I just started trading for a fund, I was taking 5, 7 trades a day. Meanwhile, my boss would take 3 trades a week, and I was taking 7 a day, 10 a day, and I was just basically 80% of them were shit, a few losers, a few winners. And you're just sending money to your broker, essentially. That's all you're doing. You're just spinning wheels, So instead of trading C, B, and A setups, your job is to just sit on your fucking ass and be patient and trade A type of setup only. That's it. You just have this one A type of setup that you're, after a year or two of finding out what your bread and butter trade is, which I will mention in later follow-up days. Once you how to identify and how it usually happens, et cetera, right? So I know my bread and butter trade, and I just take that trade every single time I see it, and most of the time it works out. Okay, but I just have to be patient. Let the market come to me. I don't chase. I don't do fancy shit out of boredom. Okay, because I've been beaten like a rented mule. By markets. So it's not that I'm a genius. It just, they beat the stupidity out of me. At a certain point, you just keep losing until you start realizing that don't do this shit, because it's just going to be another painful day then. Why? And as a human being, why are you going to, unless you're a masochist, I don't want to experience pain. I don't want to experience pain. I want to enjoy it, right? So, this is how you learn and avoid stupidity. So don't jump on just because you're in front of a computer doesn't mean you have to trade. Okay, it doesn't mean that the trades are there. I understand that the market is constantly moving and there are but when you force stuff, 70 to 80% of the time when you're forcing trades, they're shitty trades. Okay, when you're like, I don't know what to do today, and I'm like, all this, sitting there. Trying, but it's Monday or it's Tuesday, it's 9 o'clock, I need to work, I'm a hustler, baby, all this bullshit. No, you don't need to do shit unless the setup is clear, cookie cut clear, and it's it's damn fucking obvious. Then don't take it. Just don't do anything. Okay. So for me, this is gold. I want to see some kind of retracement to some kind of major decent level. And if it goes without me, then it goes without me. I don't give a shit, I'm not. Oops, shit. One sec. I closed the fabulous window by accident. One sec. All right, back on it. All right. Give me one sec. Little technical difficulty. Where is this thing? There we go. Back on it. All right. So if it goes without me, then it goes without me. It's okay. You don't need to. Again, you have to be comfortable enough to be not comfortable. You have to be patient enough to understand that there will be other opportunities, and the one time where this trade will be a winner, meaning you chase it up here and it goes a little higher, you would just taught yourself how to trade a shitty trade, and it will be in your mind as a positive thing to do. So now you're reinforcing shitty behavior in your own head that you're not even aware of, that you will be keep taking these type of trades at time and time again. But in reality, you will, most of the time, you will only remember those winners, and then for every winner, you're gonna have 4 losers. Okay, so when at the end of a quarter, you're gonna do your, well, you know, at the end of a month, a quarter, when you see what you've made dick. Okay, you probably lost money. So this is how you avoid that. You need to reinforce good behavior, just like with fucking dogs, I suppose, because we're animals. All right. So you reinforce good habits, and everything else will take care of itself. Okay. So that's why you need to be patient. And I know it's hard to be patient because a lot of young, I was young too. I was not impatient. I'm still not a patient guy, like I said, but the patience was beaten into me by the markets with a baseball bat to my face, So over the head, smacking and smacking and smacking me with a stick until I learned it. Okay, so don't be a mule, don't be a stubborn mule like me. Maybe smarten up a little bit. Okay, so for now, this is gold. This is I explained to you my reasoning for wanted to do long gold, not here. And again, I already caught. I did catch a reversal, but you don't need to worry about that. All right. So I already made money, so I'm just gonna wait for a pullback into a decent level. Once I start seeing a reaction from any of these levels, it starts as the price pauses, put some kind of exhaustion pattern and continuation pattern. I want to hop on the continuation pattern because there's still plenty of room to go. Okay, to all-time highs. So don't chase. Wait. Be patient and like a hunter. Let the prey come to you. Let the price come to you. All right, let's take a look at the indices. ES. I mean, this is a little harder because this is, by the way, where nobody wanted. This is the tariff bullshit talk. I made a video that you should be buying right here. You can go on YouTube, find the video from April, where on this fucking Friday when it happened, I literally, wait 1 sec, let me clean this up. Here, where was it? Yes, right here. Somewhere here. I remember right the Sunday open, gap up, and that I said this is the bottom. I released the video on the Sunday, say buy this dip, and I outlined the whole reasoning behind why you should have been buying it. And look at this, all-time highs. While everybody was shitting their pants and saying, that's it, Trump ruined the fucking world and all this. This was done specifically to get the weak hands out of their positions. All right, you got shook out. Again, big professional traders too. I'm not talking about retail guys. And now you have a V-shaped recovery, which means we should be going even further up. Again, should you buy here? Probably not. You're chasing because again, it can correct easily. So you have to be patient. Don't chase. Don't chase up here. You kind of missed. If you missed this, wait for the pullback and then go again. Maybe it will go up for a few more days. Then it's gonna do this, kind of like it did this, right? So it did retest the previous high and then boom. So you mark this previous high. Maybe you'll do this. So you wait a little bit and then you buy here. Okay. So this is because why? Well, because the trend is up. So why are you gonna piss against if institutional players managing trillions are buying shit up? Who the fuck do why do you think that you should be shorting it? Why? Because, this is the top. No, this is the top. This is the top. People were trying to pick a top every single time. And instead of enjoying this ride, most of them got stopped out 5 billion times. And then they finally maybe caught a top. They maybe broke even at best. With all the agony, sitting in front of the computer for 20 hours, biting their nails, sweating, That's a stupid way of living and a stupid way of trading. Okay, so the trend is up, trade with the trend. Trend is your friend. All those old sayings, they're all true. You know, they're there for a reason. So it doesn't matter. Nasdaq, US 30, it's all the same shit. Same thing. Okay, so it just plowed through. See, and this is the reason. Perfect example, by the way. See those fibs? I had these fibs since forever here. Let me make them a little cleaner, a little lighter, so you can see them. You see these fibs? This is why you don't leave orders at levels, but you wait for confirmation. I wait for confirmation because you don't know that it's stop here, stop here, stop here. Do you see any reversal pattern here? No. So why would I leave orders at some kind of level when I don't see any sign of reversal and follow through? And this is why I don't leave orders. That applies to that example with gold, right? Where I just explained to you, I don't know from which level it will bounce, if it bounces at all, but I'm definitely not leaving any orders yet, right? I want to see confirmation. That's how I sleep better at night. So same thing with, where is it? Thank you. Yeah. So same thing here, okay? So right now, wait. This is all-time highs. There's no point in chasing this anymore. Wait for any pullback on whatever time frame you want to trade on, 1 hour, 4 hour, whatever. But this is obviously overextended. Can it overextend more? Sure, it can. But for now, wait for it to start showing you signs that the trend is continuing, because you don't want to be caught up in this essentially, okay? Because this was a trend up, then this is correction, another leg up, okay? So you need to wait for the correction to be over, and then you can start joining the trend again, okay? All right, let me read up a few things that you guys, let's take a look. Wait, let me take a look at the US dollar index just for the currency guys. I'm not going to do every currency because, because it will take forever. But it's self-explanatory. You can see that the dollar is obviously getting hammered. These are some levels that I had. This is actually a good level to buy. I think this is some weekly level, monthly level. Jesus Christ. Okay. Wow. So we just reached the bottom of the a monthly level, and we're taking a pause because you have a confluence of a fib with a trend line. This is not a bad level for a temporary, at least, bounce, okay? Which is interesting. I think we might have a small dollar correction upwards, meaning euro lower, dollar, pound, Aussie, Kiwi, whatever, US CAD, dollar yen, everything in US, priced in USD. Which has a USD component, probably will experience a small short time bounce. I don't know if it's going to bounce up or it's going to temporary bounce, but I think it's setting up, at least looking like it's setting up right now. Maybe got to wait for today's close though, because this is a daily candle. It can still close way in the, it can still close like this. If it closes like this, obviously the level that it'll hold. So if it closes like this, and tomorrow you have a follow through above the highs, buy that follow through, put your stop. So you have a follow through here, put your stop here, and ride a little bit. You're at least gonna get 1-to-1 trade here as a short-term bounce. Okay, this is a trend reversal, trading against the trend setup. So again, lower probability than trading with the trend. So not a financial advice and all this blah, blah, blah. So don't be idiotic about it, right? So anyway. All right, guys. Look for reversals. I can't just, it will take forever for me to give all the things out. I'm doing a small series for 3 weeks until July 21st. I'm doing this series of every day. So tomorrow we're gonna revisit this. I'm gonna show you how I look for reversals, and maybe we'll start a little earlier. I don't know. We'll post on social media, and we'll do another session. Hopefully, we'll catch something live, as we've in the previous limited run. We caught plenty of trades right as we were trading. So thank you all for joining. I appreciate you all. We will continue tomorrow. I will take more questions tomorrow, as today was kind of like a global overview of things, and our triumphant return to the limited series podcast, whatever, live trading, YouTube bullshit. All right. Thank you for joining. We'll see you tomorrow. Let's say 9 a.m. New York time again, and